Hey traders, Jonathan Rose. Today we're going to be talking about the only indicator that market makers on the floor of the Chicago Board Options Exchange use to value options. It's a lot more simplistic than people think. Market makers use unusual options activity. Unusual options activity is being able to decipher what the big institutions, what the big hedge funds are doing. Here's an example because we found some major unusual options activity this past Friday, yesterday. Barnes & Noble. As my members know, I personally think Barnes & Noble is a phenomenal buyout candidate. They're not making money. They own all this infrastructure. It seems like a natural fit for a Starbucks, maybe an Amazon, maybe a Target. I think eventually Barnes & Noble gets bought out. The tough thing about these kind of trades is timing. Because when you trade options, it all comes down to timing. It all comes down to what expiration month are you in. On Friday, this past Friday, we got a really good sign. Because not only do we think that Barnes & Noble has the potential to get bought out, we got some confirmation from a very, very large institution. Barnes & Noble in front of you, let's look at the options chain. March, April. If I go to options time and sales, April 6 calls, 5,716. Now, is that a big order? Is that going to constitute for unusual options activity? Well, in Apple or Amazon, it might not. But in Barnes & Noble, April 6 calls, 5,716. Let's use 6,000 for easier math. The 6 calls are in the money. If we expire today, these would need to turn into stock. So 5,716 options would be 570,000 shares of stock that whoever bought these would be long. 570,000 shares of stock is about 40% of the overall volume for that day. That is a major, major order. Think of it this way. What happens if this person, instead of buying the calls, doing the option trade, he went in and bought the stock? Well, the stock probably would have been up a full $1, maybe even more, because Barnes & Noble doesn't have the liquidity in the stock to handle such an order. But the options market sure does. Now, how do I know that these were buying? Great question. Let me tell you. Time and sales rules all. You could always tell what's going on with an options order by using time and sales. So if we go April 6 calls, it was done at 9:43. If we go back to the chart, if I put it on a 1 minute, and we go back and we look at 9:43, it's right here. 9:43, big up move right after the order. This tells me, this confirms that without a doubt, whoever was buying these calls is the one who initiated the order. So the institution or the hedge fund or the endowment who did this trade bought the calls. The market maker sold the calls. The market shot up after that. Why did it shoot up after that? Well, somebody came in and bought an enormous amount of upside speculative calls. The market makers sold them the calls. In order to hedge the trade, the market makers are then forced to buy stock. That's why you'll notice right after the order, the price of the stock jumps up 20 cents. It's about 3%. It chills out, rallied throughout the day. The great thing about this is I shared the trade idea with my members. So far, the trade's been under pressure, but we're sticking with the thesis. Not only do we think now Barnes & Noble has a chance of getting bought out, there's a major player, an institution, that just bought 5,000. Check that. Not just 5,000, they bought 8,000 for a total of probably adding to this. It's probably going to be 20,000 or 22,000 open interest. Somebody is making a very aggressive bullish play, speculating that Barnes & Noble has the potential to be bought out. These trades were done in April. You can see here I have a position in March. Hey, March might not be the right expiration date. These guys are going in April. So maybe the members we should consider rolling out to a further out date, considering those option calls jump on the back or piggyback this major institutional trade. Hope that helps. My name is Jonathan Rose, owner, active day trader, soon to be masters in trading. Thanks, guys.